You looking for a swing trading strategy that works, that actually works? I call it position trading. You guys call it swing trading. So I will refer to it as swing trading for now, and I'll explain why I call it position trading and why you call it swing trading at a later stage in the video. But we're gonna get to that. I've been doing this for 33 years. I've been doing this for an insanely long time. And all I'm gonna do today is explain to you the best swing trading method that you can use to make a profit in the markets. And the first thing you've got to do is separate the word strategy from system, because I'm going to show you a charting system, a price action system, where you can choose your trades, an area where you can find the trades that are going to work for you, and you can manage the trades that are going to work for you. But the strategy is completely separate from the system. And the strategy is what's going to make you the money at the end of the day. You'll find that most older traders, most older guys like me, tend to move away from the faster day trading, the 5-minute charts, the 1-minute charts, and end up on 4-hour charts, day charts, and slower trading. There's more money to be made there if you're patient, if you get the psychology right, and you start to get away from the fear. The more you understand about the markets, the more you start to understand that the money's made on the slower time frames with time in the market, rather than trying to time the market. Timing the market is really, really, really difficult. And this is where it all comes together. This is where the issues all come together. Guys, for those of you who don't know me, I'm Rob. And guess what? It's Coffee with Rob. For those of you who do know me, I'm still Rob. And it's still Coffee with Rob. Good old coffee. Let's get on with it. Let's go and have a look at the charts, and I'll show you the price action system that's going to work for you in the markets, the price action system that's going to help you to take your trades. And I'll explain why the system is still necessary, why you still need a system to trade with. Let's go and check it out. So here we are on the charts. And if you look at a chart, what you find is the chart is there for you, which is all well and fine. You've got your chart, everything's here. You're looking at the chart and you're thinking, which way am I going to go? Now, what I normally do, well, let me first explain on what swing trading is, the difference between swing trading and the difference between position trading. See, I call it position trading because what I do is I come to the market and I take a position, I leave it in place on the strategy, and then I come back and see how my position did, or I manage the position. Swing trading in our day was you take the trade when it's short or long, and you trade it all the way up to the top, and then you turn the trade around and you trade it short all the way down. That's what we referred to as swing trading. Now, I believe you guys refer to it as swing trading today because you've just adapted it to we trade long and we trade short. And that's why you call it swing trading, which is fine. It's a good way to refer to a slower method of trading. But I'm going to refer to it as position trading today as much as I possibly can. And it's very much about taking a position in the markets. Now, what you've got to understand is charts don't have a predictive capability, and neither do you. We don't have predictive capabilities. We aren't able to predict into the future what's going to happen next. All we can do is take a high probability trade. And in any situation, that's the only outcome. It's a 50-50 trade, no matter what you do. Always going to be a 50-50 trade on a chart. Now, you can use any system you like. Every single system on charts works. All of them work. They've all been back-tested by some genius. Some genius has gone in there and invented this system, and they all work. Now, you can put all kinds of indicators on here. You can put RSIs, you can put stochastics, you can put MACDs, you can put moving averages, you can put Ichimoku. There's a whole number of things that you can put onto this chart that you don't need on this chart, but you can put them on there if you want to. But all I do is I look at the line and I say to myself, where's the resistance? Where's the support? And I effectively trade off of that. Then I put a trade in, and there's 3 ways that I trade. There's the effective trade with the trend. The trend is your friend. Trade in a range. There's a range. You can trade off the top, trade off the bottom on a regular basis. And then I trade on breakouts. If a price breaks through a resistance, breaks through a trend resistance or breaks through a normal resistance, breaks through a support, breaks through a trend support, and it confirms with a closed candle on the other side of that resistance or support, that will confirm to me that we have a breakout trade. And a breakout trade is something that runs really well usually, and that's something that will follow. A good example of a breakout trade is this right here. This is the United States dollar South African rand. I did trade into this more fundamentally than technically, and I've been in the trade for a while. Time in the market. I'm trading on swing trading. I can leave the trade in. I don't need to keep on buying and selling it every 5 seconds or every 5 minutes. You must remember every candle on a 4-hour chart is valid for 4 hours. There's 4 hours worth of information in that candle. When you trade on a 5-minute chart, there's only 5 minutes of information in that candle, and you've got a different amount of information, which gives you very poor information because you don't really know what's going to happen next. In that 4-hour candle, there's a number of 5-minute candles that have taken that direction and gone down that way. And every time that 5-minute candle closed, went up, it went down, inside that big red candle for 4 hours. So the information you've got on a 4-hour chart is that much more valid than the information on a 5-minute chart. I do use the example of, for example, when you're busy trying to start a new project or a new business and you put a sample size of people in to check how your invention looks, if it's good or bad, and the amount of people that you use. If you use 5 people, it's like using a 5-minute chart, and if you use 400 people, it's like using the 4-hour chart. You're going to get a better result from using 400 people. That's just kind of where it goes. And I mean, anyone would rely more on the higher number, so that's where it comes about. A breakout is, for example, this was trending down, it was bearish, it was going down, it hit the support, and it bounced off the support, so it's staying in its range, which is really good. And then it's breaking through this trend resistance and breaking to the upside. It's also breaking past the prior high, hopefully, which is really good. And then it's heading up towards the resistance. Now you've got to be careful because the markets are alive. So what I normally have a rule of is there must be 3 touches on a trend line. And if there's 3 touches, then it's a trend. And if I was to move this line up to that level, there would only be 2 touches. So that's not valid. So this is the valid line, and it's broken through to the upside. So that's a breakout scenario. So you've got a nice breakout scenario there. And then if you look at the German DAX here for a moment, if we take a look at this trade, you can see there was a demand of money here. This is not a support, it's a demand of money. Actually, it is a support because it's hit this area a number of times and wanted to bounce back up. What it does is it actually is breaking through there, and it's a breakout trade breaking to the downside, but the confirmation is not there because you're getting a long tail, which is all the buyers coming back into the market. So all the buyers are coming back into the market on this particular trade, which makes it a little bit of a tricky trade. But if that closes, and it closes with a nice red candle, that's a solid confirmation that that's a short trade. It's a breakout trade, it's breaking to the downside, and you're going to go short on that particular trade. When you're trading, keep your eyes open for other trades. For example, have a look at the NASDAQ and the S&P and see what they're doing, because index tend to follow each other. So what you want to see is the S&P doing the same thing? No, it's not. It's kind of bullish. So will the DAX remain bearish? Keep those kinds of things in mind when you're trading and when you're looking at trades. But as I always say, and now let's put the charts behind us. As I always say, charts don't have any predictive capability. The reason that we use charts in the markets, the main reason that we use charts in the markets is to give us that high probability trade, and also to give us the ability to manage a trade and to manage our risk. What you've got to do now to be profitable in the market is separate the charts from the strategy. What you have to understand mostly is that win rates don't make you money. Now, why don't win rates make you money? Win rates don't make you money because you can win 7 trades in a row at $10 a win, and the 8th trade could lose you $1,000. So you've got a 99% win rate or 90% win rate, but you're losing money. That's why win rates cannot and will never make you money. What makes you money is a plan, a business plan. If you were going to start a company tomorrow, surely you would have some kind of plan as to how you're going to start that business. You would have some kind of idea of what you're going to do. You don't need a 1,000-page business plan. Let's be realistic. All you need is an idea of what you're going to start, how much it's going to cost you, how much capital you're going to need. Are you going to need staff? Are you going to need stock? Is it a factory? Is it a shop? Few simple questions. When you get into trading, you tend to forget to do that. You tend to forget that you need a plan to make a profit. You also need capital. I mean, how many people get into trading with no capital? No capital whatsoever. Here we go. We're trading today. We're going to start trading. Are you insane? You need money. You need money to trade with. These days, there are prop firms and funded accounts that you can purchase and you can trade with those, which are great. And if you want one of those, there are some links in the description below. But if you're using your last hard-earned cash, this is where the tricky part comes in. You have to understand that it's all in the mind, that it's all psychology, and it's all about fear. So before we go there, let's understand something really important, and that is that trading is risky. Most traders lose money. And if you don't like risk and you don't like losing money, you probably shouldn't even be trading. 70% of swing traders lose money. 99% of day traders lose money. And that's a fact. What I'm saying to you here is, if you're not prepared to lose the money, then you're in the wrong game. You're in the wrong place. Go and become a salesman or a road sweeper, or I don't know, something else. A doctor, perhaps, or a lawyer. This is a risky game. A lot of people will tell you it's easy to make money in trading, but they're not telling you the truth. Because what actually happens is the charting side of the business, which we were looking at a moment ago, the charts, that's easy. That's the easy part. This I can teach to a primary school child. Basically, when a candle goes above a line, you buy or you sell. And effectively, I have a subscriber right now here on this channel who doesn't even worry about the charts as much as if the dog barks, we're going long. That's it. End of story. That's how he chooses his trade. But he uses our strategy to stay in the game. That's the important part. You're probably thinking to yourself, but what's the strategy, Rob? What are you talking about? What is the strategy that you go on about? Because we've looked at the lines, we know how to take a trade. We've done a course and we know how to take a trade. I know how to work with Ichimoku. I know how to work with Fibonacci. I know how to work with all these fancy things that you put on the chart. I know how to work with all these things. So why do I need your strategy? You don't make money from charts. You don't make money from win rates. You make money from having a plan. And the plan is simple. And that is to manage your risk and to keep your risk the same on every single trade. You want to stay in the game and you want to make a profit. How do you make a profit though? You make a profit by making more on your winning trades, losing less on your losing trades. The big question always comes is, but how do you do that? How do you lose less on the losing trades and win more on the winning trades because you're just taking trades and willy-nilly and you're just selling here and buying there, and when you see a bit of green, you click out? I know that's what you're doing because you all do that. We all do that. We all get into trading thinking, I'll just take profits where I can and I'll just take losses sometimes. Most important thing in trading is to learn that you're going to lose. And not only that you're going to lose, but that you're going to lose at least 50% of your trades, if not more. So now you're going to ask yourself the question, why am I getting into trading if I'm going to lose 50% of my trades, if not more? Why would I do that? Why would I even consider that? Well, if you're swing trading, you stand a chance of surviving this. And you're going to ask how? And I'm going to give you the answer now. And it's really simple. What you do, let's say you have a $25,000 account. And I'm going to use that as an example because the charts we used here, that was a $25,000 account. I have $100,000 accounts. They're all the same. Doesn't matter. It's just a number. But the trick is to stay in the game. Now, if you risk 10% per trade and you lose 10 trades, you're going to lose your entire account. Am I right? But if you risk 1% per trade, you lose 10 trades, you're only going to lose 10% of your account. So my policy is to risk 1% per trade on every single trade, which on a $25,000 account is $250. The $25,000 is only to cover the margin. The thing is, a lot of you will say, but that's not enough. If you want to risk more, you're more than welcome to risk more. If you want to risk many people risk 2%, many people risk 3%, many people risk 0.5%. What you've got to figure is what's your risk threshold and how much do you want to protect your account? How quickly do you want to protect your account? Because you must remember, the higher you make the risk, the quicker you're going to destroy the account if it goes pear-shaped. You must always remember that you're going to lose half your trades and you want to stay in the game. Now, if the first 5 or 6 trades lose and you're at a high risk rate, your account's going to look pretty damaged. Be careful of that. Particularly if you're new and you're starting out, stick to the 1% or less. Start small and work your way up. Become comfortable with your trading sizes. Become comfortable with the amount of loss you can take. But the trick here is this. What you do is you risk 1% per trade on every single trade, keeping the risk exactly the same on every single trade. But how do I take a trade and put a stop loss in place and make sure that the risk is the same on every trade? Let's have a look at the charts and I'll show you quickly what you do. Let's say you wanted to take a trade on this S&P 500 right now. Let's say you wanted to take a buy trade right now on this trade. All you do is you click buy. On most platforms, I mean, some of them are a bit more tricky, like MT5 and whatnot. But on this particular, this is TradingView, it's quite easy to say, I want to take a trade here. Where do I want my stop loss? I want my stop loss, I'm going to buy. Let's say I'm going to buy. I want my stop loss below the last low. So I want it at an invalidation area. I want it at an area where I feel that if the price gets there, my trade's no longer valid. If I think about it, my trade might actually still be valid if it gets down to this level. I'm going to put my stop loss way down here at 63.40. No, 63.40. I'm going to put my stop loss quite far away here. Does it matter? No, it doesn't. Because what I'm doing now is I'm clicking on stop loss, saying, do you know what? I'm putting my stop loss at 63.40. But that would cost me $806 at this level. I don't want to lose $806. I'm going to take my lot size down to 0.2, 268. That's as close as you're going to come. It doesn't have to be exact. It has to be close. So now you know that you're losing in the region of the $250, which is close by. How much will my profit be? Will I make a profit? Will I be able to make a profit? And if I'm expecting 6,800 off of the S&P, then I'll be making $650 profit for a $269 loss. Buy, and there you go. There's your trade. That's how you work out your stop loss. That's how you work out the amount of stop loss that you want to take. Once you've figured that out on every single trade and you're taking the same stop loss amount on every single trade, then it becomes easy. All you've got to do is make sure you've got a decent risk to reward. I'm not going to go back to the charts now. So you want to be making more on your win and losing less in your loss. You don't want to be risking $250, $260 to make $50. You want to be at least making the $250 or $300 or $400 or $500 or more, because that's what you want to target. If it's not possible to reach that target, if the trade says we won't be able to make that level, then don't trade it. Don't make up figures. Make sure that the chart that you're trading on can actually make that profit for you before you take the trade. And then you know you've got a risk to reward and you've got a trade that you can work with. Now the question is, how do I manage the trade? It's really simple. It goes into a profit. All you do, and it goes into a decent profit. All you do is you take the stop loss up to cost. The trade is now costing you nothing. And the trade was costing you $250. Now it's costing you $0. When it goes even more into a profit, you move the stop loss up even further and you follow the trade. You follow the trade with the stop loss until it eventually comes back, takes your stop loss and gives you the profit. Real easy, actually. That's not difficult at all. It's a swing trading strategy that works for me every single time, and it is profitable. Now, if you do happen to be good at trading and you do happen to have a good win rate, it's going to work even better for you. But if you happen to be really bad at trading and unlucky, as they call it, and you feel like the world is going after you, and every time you take a trade, it seems to lose, and you seem to lose a lot of trades, that strategy is going to work for you. Because if you're patient and you sit in your hands and you let the trades come to you and you don't get out of your wins early and you don't dollar cost average down on the losing trades and you don't move your stop loss away, if you just follow simple rules, keep the stop loss, don't dollar cost average unless you're going up, which is fine, unless you're going into profit, which is fine, but not in a loss. Take your losses early if you can. Get out when you see it's invalid. Walk away from losses and then let the winners run. Follow the big ones, follow the big winners. Try and make as much on the wins as possible. My profit comes from 1 or 2 big wins a year, really big wins. Those clean up, those make me loads. And then a whole bunch of medium to large ones in the percentages. So in other words, if you were to take the 100% of my trades, I would say 10% of them are big ones, and another 15 to 20% would be medium to large wins, and then the rest of the wins would be smaller wins. Anything other than that are losses. And that's how you trade. That's how you swing trade, position trade. I explained to you that it's actually called position trading, not swing trading. But if you want to keep calling it swing trading, why not? Guys, while you're here, join the members area. Don't forget, you get trade of the day every single day and a bunch of other perks and whatnot that are there. And if you've watched the video this far, all the way to this point, at least subscribe and stay with the channel. Guys, thanks for watching. Until next time, keep your feet on the ground, reach for the sky. Peace out.